Today we are going to discuss one of the most commonly misunderstood topics in the Iraqi dinar community. The concept of deleting the zeros and whether it has anything to do with the exchange rate of the Iraqi dinar. This topic has created years of confusion among investors, followers of Iraq's monetary reforms, and even people who casually follow Iraqi economic developments. In today's analysis, we will carefully separate facts from misconceptions and explain what this policy actually means, why central banks consider it, and how it relates, or more accurately, does not directly relate, to the value of a country's currency. One of the biggest misunderstandings surrounding Iraq's monetary reform is the belief that the phrase deleting the zeros automatically means the Iraqi dinar will suddenly receive a higher exchange rate. In reality, these are two separate concepts. Although they may occur as part of a broader monetary reform strategy, they are not the same policy, and one should not automatically be interpreted as evidence of the other. When economists and central bankers refer to deleting the zeros, they are generally talking about changing the physical structure of the currency in circulation. This involves replacing large denomination banknotes, such as the current 25,000 dinar, 10,000 dinar, and 5,000 dinar notes, with a new series of lower denomination notes that are easier for businesses and consumers to use in daily transactions. The purpose of such a reform is administrative and practical, rather than an immediate adjustment to purchasing power. Countries that have experienced prolonged inflation often end up using banknotes with very large numerical values. Over time, governments may choose to simplify the currency by removing zeros from the notes. This process is known internationally as redenomination. It is important to understand that redenomination and exchange rate policy are separate decisions made by a country's monetary authorities. One changes the appearance and denomination of the currency, while the other determines how the currency is valued relative to foreign currencies in international exchange markets. Let's use a simple illustration, similar to the one mentioned in today's discussion. Imagine that a 25-unit note has a value equivalent to $3. In that situation, the note would naturally be worth $75. Now imagine another scenario in which a 25,000 unit note exists under an entirely different currency structure, but each unit is still valued at the same $3 rate. That larger note would mathematically represent $75,000. The important lesson from this example is that the denomination printed on a banknote is separate from the value assigned to each currency unit. The number printed on the note alone does not determine purchasing power. Instead, purchasing power depends on the value of each individual unit of currency. This distinction often becomes lost in discussions across social media and investment forums, where people sometimes assume that removing zeros automatically multiplies wealth. That is not how monetary economics works. When a country redenominates its currency, the central bank typically adjusts prices, wages, bank balances, accounting records, and financial contracts proportionally. If 3 zeros are removed, prices also lose 3 zeros. Salaries lose 3 zeros. Bank deposits lose 3 zeros. The purchasing power remains unchanged because every part of the financial system is adjusted simultaneously. Think about changing centimeters into meters. The numbers become smaller, but the actual physical distance remains exactly the same. The measurement changes, not the underlying reality. This is why professional economists consistently explain that deleting zeros by itself does not create wealth. It does not automatically increase national income. It does not automatically strengthen purchasing power. It does not instantly improve living standards. Instead, it simplifies accounting, cash handling, pricing, and financial transactions. Now, does this mean exchange rates never change during broader monetary reforms? Not necessarily. Countries undergoing significant economic reforms sometimes experience changes in exchange rate policy over time. However, those changes result from economic fundamentals, central bank policy, foreign exchange reserves, inflation control, productivity, government stability, investment flows, fiscal discipline, and confidence in the financial system. Not simply because zeros were removed from banknotes. For Iraqi dinar followers, this distinction is extremely important. The Central Bank of Iraq has spent years modernizing the country's banking sector. Banking reforms, electronic payment systems, anti-money laundering measures, financial transparency, and improvements in international banking relationships have all been major priorities. These structural reforms are designed to create a stronger financial system, capable of supporting economic growth over the long term. Separately, discussions about introducing lower denomination banknotes have appeared periodically over the years. Such discussions generally relate to making everyday transactions more efficient. If economic conditions eventually justify their introduction, lower denominations become practical when people actually need them in daily commerce. If prices are expressed in very large numbers, using small notes becomes inconvenient. If the monetary environment changes over time, introducing additional denominations can make cash transactions easier again. This concerns currency structure rather than exchange rate policy. Many viewers ask why Iraq originally introduced large denomination notes in the first place. The answer lies in Iraq's economic history. Following years of conflict, sanctions, inflation, and economic instability, larger notes became necessary because everyday transactions required increasingly higher numerical values. Printing larger notes reduced the physical amount of cash people had to carry. This is not unique to Iraq. Many countries that experienced inflation introduced larger banknotes to accommodate higher prices. Later, after economic stabilization, some of those same countries simplified their currencies through redenomination. Examples around the world demonstrate that redenomination can be successful when accompanied by sound economic policy. However, it can also fail if inflation remains uncontrolled or if public confidence is weak. The success of any currency reform depends far more on economic stability than on changing the appearance of banknotes. For Iraqi dinar followers, one of the most valuable lessons is to focus on the broader economic picture instead of concentrating solely on terminology. Questions worth asking include: is inflation stable? Are foreign currency reserves healthy? Is non-oil economic activity expanding? Are banking reforms progressing? Is private sector investment increasing? Is fiscal policy becoming more sustainable? Are international financial relationships strengthening? These are the kinds of indicators that economists monitor when evaluating a country's monetary outlook. Simply hearing the phrase "delayed the zeros" does not answer any of those questions. Another misconception is that lower denomination notes somehow require a specific exchange rate before they can exist. In reality, central banks issue currency denominations based on practical transaction needs within the economy. The existence of a smaller note does not automatically reveal what the exchange rate will be. Instead, denomination structures reflect how consumers, businesses, retailers, banks, and government agencies conduct daily financial activity. As Iraq continues expanding electronic payments, digital banking, point-of-sale systems, and financial inclusion initiatives, the overall use of physical cash may gradually evolve as well. Many central banks worldwide are encouraging greater use of digital payment systems because they improve efficiency, reduce cash handling costs, increase transparency, and strengthen tax collection. These developments are part of modern financial infrastructure and should be viewed separately from exchange rate speculation. It is also worth discussing why misunderstandings about deleting the zeros continue to circulate. Part of the reason is that monetary reform involves technical terminology that can easily be misunderstood outside professional economic circles. When people hear phrases like currency reform, redenomination, restructuring, deleting zeros, or introducing lower denominations, they sometimes combine these different concepts into a single expectation. However, economists treat each policy separately because each serves a different objective. Currency reform can involve multiple components implemented over several years, rather than one single event. Banking reform addresses financial institutions. Payment modernization improves transaction systems. Fiscal reform concerns government finances. Exchange rate policy relates to foreign exchange management. Iraqi redenomination concerns the numerical structure of banknotes. Although these policies may support one another, they remain distinct decisions. This is why careful analysis is so important. Rather than assuming every announcement signals an immediate change in currency value, it is better to examine what policy officials are actually discussing. If officials are talking about replacing notes, that concerns cash circulation. If officials discuss inflation targets, that concerns price stability. If officials discuss reserve management, that concerns foreign exchange strength. If officials discuss international banking integration, that concerns financial connectivity. Each topic provides different information about Iraq's economic progress. From a short-term perspective, continued discussions surrounding monetary reform demonstrate that Iraq remains focused on improving the efficiency of its financial system. Modern banking infrastructure, improved payment mechanisms, enhanced regulatory oversight, and stronger financial governance all contribute to a healthier economic environment over time. These reforms may not produce immediate headline-grabbing changes, but they represent important building blocks for long-term financial development. Investors and observers often focus on dramatic announcements, yet sustainable economic progress usually occurs through gradual institutional improvements rather than sudden transformations. From a longer-term perspective, the strength of any currency ultimately depends on the strength of the underlying economy. Diversification beyond oil revenues, stronger private sector growth, increased foreign investment, responsible fiscal management, effective monetary policy, and political stability all contribute to greater confidence in a nation's currency. Confidence is one of the most valuable assets any central bank can build. When businesses trust the banking system, consumers trust the currency, investors trust economic institutions, and international partners trust financial regulations, the overall monetary environment becomes stronger. These fundamentals matter far more than simply changing the numbers printed on paper currency. For Iraqi dinar followers, maintaining realistic expectations is essential. Financial markets respond to data, policy decisions, economic performance, and institutional credibility. No single phrase or isolated announcement should be interpreted in isolation without considering the broader economic context. Responsible analysis means examining multiple indicators together, rather than relying on speculation or simplified explanations. Today's discussion reminds us that deleting the zeros is fundamentally about currency denomination and cash management. It refers to replacing larger denomination notes with smaller ones as part of a broader monetary framework. If economic conditions support such a move, by itself, this process does not determine the exchange rate. Likewise, exchange rate policy depends on a much wider range of economic variables that central banks carefully evaluate over time. Understanding this distinction helps viewers interpret future news more accurately and avoid unnecessary confusion when new monetary reform discussions emerge. As Iraq continues pursuing banking modernization, strengthening financial governance, expanding electronic payment systems, improving regulatory standards, and supporting economic diversification, these developments deserve close attention because they contribute to the country's long-term financial resilience. For those following the Iraqi dinar, the most productive approach is to stay informed through official economic developments, central bank communications, government policy announcements, and credible financial reporting, rather than relying on assumptions based on terminology alone. Well-informed observers understand that meaningful economic progress is usually measured through consistent reforms, stronger institutions, improved transparency, sustainable growth, and responsible monetary management. These factors collectively shape confidence in a nation's financial future, far more than the simple design or denomination of its banknotes. As always, we will continue monitoring Iraq's banking reforms, monetary policy developments, fiscal updates, international financial cooperation, and broader economic indicators so you can better understand what each development may realistically mean for the Iraqi dinar and Iraq's economy as a whole. Thank you for watching today's analysis. If you appreciate responsible, factual, and balanced coverage of Iraqi dinar developments, please subscribe to the channel and like the video so you never miss future updates. Remember, this content is provided for informational and educational purposes only. It should not be considered financial, investment, or legal advice, and viewers should always conduct their own research and consult qualified financial professionals before making any investment decisions.